Hi everybody, this is Ospreyeye from mychartcoach.com, and we're going to take a look at some of the ticker symbols in play today. Okay, first up we're going to look at JDST. Okay, this is the junior gold miners bear 3 times, and first up you've got RSI and Fasto are back in the bull zone. They both broke back above 50. There was a bullish crossover on Fasto, so they both have juice to run. The signals the chart is heating up and building strength. Notice on 80X, plus DI was getting ready to cross minus DI, the red line, to the downside, and it bounced off that level. So as long as the green line stays above the red line, that will be good for the bulls. Let's take a look at the candles here. If you looked at our last video, we were talking about this 50-day simple moving average, the green line holding. There was a close below that level yesterday, and the key level to hold was going to be the middle Bollinger Band, which is this dotted purple line. That was the closing price yesterday, and it held today, and there was a bounce off that level, and today's close was back above the 50-day simple moving average and the 3 EMAs, EMA 4, 8, and 13. So this is signaling the uptrend is still intact, and as long as candles are forming above the middle Bollinger Band and the 50 simple moving average, the chart will be strong with more upside potential. So this is exactly what bulls wanted to see. They wanted to see a bounce off this level. There was actually a volume spike today, so that's always good. That's what you want to see. Keep in mind that this is the bullish uptrending channel, and the upper Bollinger Band is the top of the channel, and the middle Bollinger Band is the bottom of the channel for uptrending stocks, making the middle Bollinger Band the load zone on pullbacks. Okay, so now the key level to break is going to be this high close right here on the what is this, the 9th, and if it can break above that level right around 23, then we're talking about a potential run up here to the 100-day simple moving average at 27.11. That's still the big level to break. Keep in mind on the other charts I had shown the gap. There's a gap back here in January, in the first week of January. So we're looking at, it needs to break above the bottom of the gap, which is this line right here, and then the line that I just made right here is the top of the gap, which is lined up with the 100-day simple moving average. That is the target if the candles stay above the 50-day simple moving average. Notice that there was a bearish crossover on the 8, 13, and 5 MACD time frame, and so if the MACD line, the black line, crosses over the blue line to the upside, that's going to be a signaling more upside potential. So JDST has the uptrend intact. Let's look at DUST. Okay, this is the gold miners bear 3 times. JDST is the junior. Here we have RSI still in the 50 to 70 bull zone. This chart has been stronger than the JDST chart, and you've got a bullish crossover on Fasto, now back above 80. Notice plus DI is well above minus DI, so the bulls are still in control. Bulls want to see this green line cross the black line, 80x to the upside. That would be a bullish signal. Notice back here when there was a break above these levels, that lines up with this candle down here and the start of this last big run. So a break above 80x with the green line crossing the black line to the upside, that could be the signal to the next breakout higher. Okay, if you look here, the candles were writing EMA 4 support higher. They broke down, and then they hit the EMA 13, the orange line. That line held, and there was a bounce today. So now it's back above EMA 4. So now it's back into this previous trend. The key levels to break are the red line and the gold line. That's the red line is the 200-day simple moving average. The gold line is the 100-day simple moving average. If they can get above those lines with the close above, that's going to signal more upside potential. Putting the upper Bollinger Band, that'll be the next resistance level at 44, and then potential run up to 48, which is this high close back here. Keep in mind there is a gap back here. This is the December gap. It's well above. We can talk about that later, but that would be a target if 48 broke. Notice that there was a declining volume pattern here for DUST as it was topping out. Volume was declining. That was a signal that the buyers were tiring. And then it was a lighter volume pullback. Look at when EMA 13 hit, that was the lightest volume day. That showed that the sellers were tired. And then today you have this big green volume bar that's above the previous volume bars. What this is signaling is that players have loaded for a potential run higher. So this is a good sign for bounce players. This is exactly what you want to see, a declining volume pattern followed by a bullish volume spike. Generally, that leads to more upside potential. For that to happen, though, DUST is going to have to break the 100 and 200-day simple moving averages. Okay, so look at MACD. Once again, it's pinched. Bulls want to see a crossover on the 8, 13, and 5. Okay, let's look at DRWI. DRWI. This is a stock that was up big today. It was up at one point 80–90%, ended up closing up 60% with RSI and Fasto both in the bull zone. The pullback from high of day has lowered Fasto. It wasn't overbought levels. Now it's at 62, so that makes more room to run until the 80 overbought level. So that has given it, it shows profit taking with the long upper wick on the candle, but it does reset the indicators, providing some more juice in the tank for a potential run higher. If you look here, there's a big spike on DI that's showing the parabolic move. There was a bullish crossover like I just talked about, so we'll see if this is signaling the start of a new run. If you look at the candles, you'll see there's this long downtrending channel. This was coming off of the lows with the bounce yesterday. Okay, it had hit the low here on Friday with a low close, and then there was a nice bounce yesterday, setting up a bullish reversal pattern after multiple red candles. And then today there was this confirmation with this big gap up. The gap up open has created another gap on the chart. If you look down here, there's this unfilled space on the chart, and so if there's a pullback, there's a potential for that gap to fill. There's a gap back here from January, and that gap did fill today. Okay, this is the top of the gap, this red line, and this is the bottom of the gap. And notice the close was right at the bottom of the gap level. That's always a really tough level to break. So it's going to need to break the bottom of the gap level and then the top of the gap level. If it can break those two levels, then it's going to put the 100-day simple moving average at 245 on deck. The close today was bullish above this green line, which is the 50-day simple moving average. Bulls want to see candles stay above that level. If they stay above that level, then there could be a push higher. If there's a close below, then you could see the candles work back into the bands. There was a break above the middle Bollinger Band. This is dotted purple line. Notice that DRWI had been in a very long downtrend. So there's a potential for a new uptrend to start here as long as this middle Bollinger Band turns into support. If it closes back below the middle Bollinger Band, then it could get back into this downtrending channel and continue that pattern. So what we're looking for here is a break. Currently there's been a break above this red descending resistance line, and this is signaling a possible trend change and a possible new uptrend starting. For that to happen though, DRWI is going to have to break resistance and hold support. The close today was above the upper Bollinger Band. That's this solid purple line at 173, so that is making it a little bit frothy here. Notice that the close is at 185 and the open was just below that. Let's see, the open level today was at 175, so it's only 10 cents above the open. The close was only 10 cents above the open. There was all this movement today. It dropped all the way down to 138 and went all the way up to the 230s, but it closed only 10 cents above. That signals major indecision. It was a stalemate between the bulls and the bears. Really, nobody made money today unless you were holding from the night before, because if you didn't sell during the trading day, because it basically ended the day where it started. And so that's usually not what you want to see when a stock is breaking out. So we'll have to see if this thing can follow through or not. There was a parabolic SAR bullish flip. There was a giant volume spike, and there were bull crosses on both MACD time frames. Okay, let's look at RT. Okay, this chart has a very similar setup. Notice RSI and Fasto are both in the bull zone. There's the same bullish crossover on ADX. This is all things that you want to see. Now this candle was a little more bullish than the DRWI chart. They both have the long upper wicks, but notice this one formed a larger real candle body. This is the open, this is the close, and so the bulls were a little stronger here. There was a close once again above the 50-day simple moving average. It's the green line, also above the upper Bollinger Band. So in order to head higher, our RT is going to need to turn the 50-day simple moving average into support. If it can do that, that's going to put the 100-day simple moving average up here at 261 on deck. That's going to be the next target as long as candles stay above the 50-day simple moving average. If they close below, then that's going to put this middle Bollinger Band on deck. If the middle Bollinger Band breaks, there could be a gap fill. Notice there's a space between high of day yesterday and low of day today. If there's a pullback, there's potential for that gap to fill. Notice there was a parabolic SAR bullish flip, a giant volume spike, MACD bullish crossover on the 8, 13, and 5, and a bounce on the 12, 26, and 9. This chart is so similar to DRWI. It looks like RT is a little bit stronger, so we'll see if it can follow through tomorrow. Okay, let's look at GSIT. This is a semiconductor stock. This thing was really breaking out hard today on the daily chart. And so I pulled up the weekly chart to try to find resistance, and it was actually breaking resistance here from 2013. Okay, this high close back here in 2013, that level was breaking, and so I had to go out even further, and so I had to pull up the monthly chart. So this chart here is a monthly chart. Each candle represents 1 month of trading as opposed to 1 day of trading, and as you can see, there's this breakout this month above this 2013 resistance level. If it can close above that level, that's going to put this 2011 level back on deck, which is going to put the $9 to $10 zone as the next target. So this is a very strong uptrend. This monthly candle, this is this month's candle, it will not set until the closing bell on the last trading day of the month. So a lot can change between now and then. This is just showing how strong this uptrend is. The candles are riding EMA4 support. Okay, it's broke above the 100-month moving average and the 50-month moving average. It's riding above EMAs 4, 8, and 13, above the middle Bollinger Band. This is just a super strong multi-month uptrend, and it should continue. As long as EMA4, the pink line, is holding, the uptrend is very strong and intact. It looks like this wants to run to the 8 to 9 range. The red flags are Fasto is up here at 100, so it's maxed at the current level, and you've got RSI at 75. There's a lot, like I said, a lot can happen between now and the end of the month. If this runs up to up to 9 and then it pulls back a little bit and forms an upper wick, that would lower Fasto. So always keep that in mind. The upper wicks on the candles lower Fasto. So yeah, very strong chart. The semiconductor sector has been very, very strong, and it's been one of the highlights of this rally. Okay, in the healthcare sector has been the bomb, which was under immense pressure today. Okay, let's look at the Dow Jones Industrial Average. This comes up as ticker symbol INDU for stockcharts.com, but this is DJIA, the Dow Jones Industrial Average. And what you can see here is, it's pulled back from above, overbought levels on RSI and Fasto. Notice it broke below both levels, and then actually RSI is still in the 50 to 70 bull zone with room to run. But if you see here, Fasto has broken below 50, and now it's headed all the way down to 20. It's at 23 right now, so it's at very hitting very oversold levels. The last time that it was down here was back here in January, and that was near the bottom of this last run. So what's going on here? Let's look at the candles. There was this run up to the high, hit the all-time highs, formed the red candle, and then it's been consolidating ever since. Look at all of these black and red candles. It's been under immense pressure ever since this first red candle. This was your signal that the stock market was cooling down. This was our first clue, and we posted a video showing that the markets were setting up to be bearish, and then the Trump speech came out, and that gave the gap up open, and then the red candle followed the next day, and it's just been all downhill ever since the speech. And so now what's going on is this gap filled. So there's the Trump's speech gap is filled, and then now the candles have worked all the way back down to the middle Bollinger Band. It closed right at the 50-yard line, what we call the 50-yard line. This is the middle right here. It's the bottom of the uptrending channel, and it's the top of the downtrending channel. This could go either way here. If there's a close below the middle Bollinger Band, that's going to signal downside risk, and that's going to put the lower Bollinger Band and possibly the 50-day simple moving average on deck. So there's huge downside risk with the close below the middle Bollinger Band. It's a key support level. Look, it's holding from back here on the 27th. Now, if it bounces tomorrow, because tomorrow is the big day, in case you've been living under a rock, it's the Fed interest rate raise day. It's pretty much 100% that rates are going to raise tomorrow, that the federal interest rate is going to be raised, and so that's going to, generally that puts downside risk on the markets. But look at what's going on here. There's been all these red candles leading into it. Now the question is, has this rate hike been priced in? Is it already priced in the market? Because it looks like it has. It's not like we've been bullish leading up to the rate hike and then it's going to be sell the news. So this is kind of setting up for a potential buy the news, which would be contrarian to what most people think. But that's kind of how the chart is set up right now. Now, if it's sell the news, that's going to be super bearish. When you have this many days of under pressure, and then if we get a big sell-off tomorrow, that could be very ominous for the markets, and it could signal the start of a correction, because right now what we have is just a pullback during an uptrend. This is still a very strong uptrend, okay, with candles riding above the middle Bollinger Band. If there's a break below the middle Bollinger Band and candles form below, then we could actually be talking about the correction and about a possible downtrend. So right now, this is just a pullback and an uptrend. And do we bounce off of this and head back up to 21 100, 21,000, head back up to these very high levels, or are we going to pull back and see the start of a sustained downtrend? So the charts are signaling that we're set up for a bounce. Notice how it's almost a doji formed here. I would call that a doji. It's very, very, very close. So it's set up for a bounce, and so we'll see if this is going to be by the news tomorrow. If there's a break below, it's going to be big downside risk, and I'll post more charts and technical analysis to keep everybody updated. The bearish crossovers on MACD were the red flags. Okay, let's look at NVCN. Okay, this is stock. It had a nice move today. It was breaking out. Notice that this had this very, very tight channel. See, check out February, how this trading range was so tight all through February. Look at the Bollinger Bands. Okay, this is the lower Bollinger Band and this is the upper Bollinger Band. It doesn't get any tighter than that. When you have super, super tight Bollinger Bands, that signals that a change in trend is coming soon. What do you look for with the change in trend? Well, first of all, you want to see the break above the middle Bollinger Band. That happened on this candle right here. That was yesterday. That was your signal the chart was heating up. The next thing you want to see is a break above the 50-day simple moving average. That's this green line right here. There was a break above that level and then a close above the 300-day simple moving average, the blue line. Those are all signaling more upside potential and that the stock is breaking out. If it could stay above the blue line and turn that into support, then you could be talking about a run back up here to 240 to the recent high close. So this is a very strong move. After when a chart is wound super tight like that, and then you see a break in either direction, generally a new trend gets going in that direction. It would be odd for it to pull back and then start a downtrend, but that could happen. But after it's been wound so tight for all these weeks, and then there's a break to the upside, many times that's the signal that's going to break out higher. The one red flag though is that it's instantly hitting the top resistance level. Notice how it failed to turn it back in December, the 300-day simple moving average, into support, and it pulled back, and it hit that level and it pulled back, and so back here in January, and so this could be the 300-day simple moving average is the top, and so it's going to need to start this new uptrend by turning a 300-day simple moving average into support. If that happens, then it's going to be above all the moving averages. If you look over here, it's currently trading above all the moving averages. So that's very bullish. Keep an eye on NVCN. There was a spike here, a volume spike. Notice how it was the largest volume bar since back here in December. And so yeah, you have to go all the way back here in December when it made the big move. So that's always another signal that the chart's heating up, because you want to follow the money, and this is signaling. Look how low the volume was preceding this move today. So this is all signaling that more upside potential, along with MACD. Notice how the MACD line is pulling away from the signal line, and how the MACD line is positive on both time frames. Okay, the red flags though. RSI is now above 70 and Fasto is above 80. They're at overbought levels. Can NVCN head higher at overbought levels? That remains to be seen. We'll have to check it out. And notice back on this last big run, RSI was well above 70 and it actually hit up here at 90. So yeah, so there should be at least another try to push higher tomorrow. Okay, thank you for reviewing these charts. If you'd like to learn more about technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. And you're welcome to come join our chat. We do teach live during the trading day, answer questions, and try to help you learn and succeed. Okay, thank you. Have a good night.